Alrighty, guys, welcome. Hope you guys are all having a fantastic day today. Welcome to this week's trading live stream where we talk about strategies, stocks with opportunities, stocks that we're holding, giving insights and approaches on trading in the market. So I hope you guys all enjoy it. If you do, smash that like button, subscribe. We got a very exciting live stream today. We have a slideshow where we answer very commonly asked questions. We have strategies. We have stocks that we're holding. We have all of this fun and exciting stuff, guys. So if you guys are new, make sure you guys smash that like button. Let me make sure we are good to rock and roll here. And if you guys are watching, it does mean the world to me. Also, guys, we do have some new stuff here. We got new merch, which should be in the pinned area here. Let me pull it up here. All right, let me make sure we are good to rock and roll here, which I think we are good here, but I just want to make sure. But we got merch, we got a school, we have all this great stuff. And for those of you that wonder, what's the code for the trading school? It's spring 25 for 51% off, like spring 2025, because it's our spring day sale. So our merch should be popping up. If you guys are wanting to check it out, it does mean the world to me when we do this here. And let's kind of jump into this here right now here. So, all right, swing trading. This is going to be a step-by-step guide for people that are just getting started with trading, whether you're a beginner or maybe you're already a full-time trader and you're just wanting to learn more info. And so if you guys want to learn more, check out our school, code SPRING25 for 51% off. So what is swing trading? This is the commonly asked question. Carter, what is it? So swing trading is where you buy a stock, because I swing trade stocks. You can swing trade almost anything. Stocks, crypto, ETFs, any asset really. I've even seen people pretty much swing trade like baseball cards and sport cards. So it's where you pretty much I swing trade stock. So I'll buy a stock, I'll hold it for more than a day, less than a year, and we'll buy it, we'll hold it for a couple of days, capture momentum most of the time on a support line, trend line, a moving average line, and we hope to sell it at a higher price. Now, a lot of people think that with trading, you find a stock at $1 and you sell it for $100 and you make $2 million. No, most successful swing traders and traders that I know, and my approach is consistency, right? I'm somebody where I'll find a stock at $1 and I'll sell it for $1.10, but I'll do it consistently over the course of a year. So, that's the approach for me here. All right, why I love swing trading. So it can be done with a part-time job. It can be done with a full-time job. It can work around other commitments. Risk control, you have less exposure to market volatility compared to day trading. Day trading is fast momentum-based trading where you're getting in and out of position, often within hours, and sometimes even in minutes. Now, obviously, trades can last days to weeks, not minutes, allowing time to research and have good, analysis. All right, step one, if you're just getting started with trading, how to get started. Step number one is to find a broker. A broker is how you have access to the market. So you probably have heard of sites like Robinhood, TD Ameritrade, Fidelity. Now, those are all very good accounts. You can swing trade with them, but the ones that I use and the one that we're going to be talking about, really today that I use is Moomoo. They offer great charting tools, real-time data, but why I love them is they offer fraction shares, so you can buy stock for as little as $5, and they offer paper trading. So if you're practicing, trading strategies, it's without risking real capital here. All right, paper trading. Paper trading is essential for people that are just getting started because you can build confidence, practice your strategies without risking real money. Obviously, you're not going to trade, paper trade your whole life. You're going to paper trade for 6 months to a year, build confidence, build a strategy. After that, you're going to start small, $100, $200 account, and you're going to try to grow it consistently. If you guys are profitable with $100 or $200, you guys can easily be profitable with $1,000 or $2,000. All right. Step 3 is to build a swing trading plan. This is very important. It's just like a business plan. You got to define your goals, whether you're short term versus long term, income or growth. You got to set risk management, decide on stop losses, position sizing, risk tolerance, um, criteria for entry and exit, technical patterns, and news events. So like entry for exit, it's like a checklist, right? That criteria for your entries and exits. It's a checklist before you buy a position. News and events. I think we all know over the past 2 weeks, how have we altered our strategy, right? We've been getting in and out of positions quicker because the market's a lot more volatile, over the past weeks, given the tariffs and reciprocal tariffs getting paused. So, we've really had to little alter our strategy to be able to get in and out of the position a lot easier. Um, Develop key swing trading strategy. Obviously, there's a million strategies to make money from trading and swing trading. The best one that I would recommend doing is to just do trend following. Trends are very, very important. You could do like a combination of trend and breakout, but it's better to be an expert in one than mediocre in five. So find one and just practice it. And we'll show you guys the one that I use. So all right, execute trades and monitor performance. So obviously step 5 here is to just trade, right? You're going to want to journal those trades. Journaling your trades is one of the most important things you guys can do because it will help you figure out what works, what doesn't in your trading. And we'll show you guys my trading journal so you guys can get it. It's super, super cheap, and it's digital, so you can do it all on your phone and computer here. All right, common mistakes to avoid. This is very, very important here. So, over trading. Too many people trade. Too many people take trades, and over trading super, super. One of the most common things you'll do, honestly, especially starting out, because you constantly feel like you need to be in a position every day. When sometimes it's just better to just sit back on the sidelines and then watch what happens. So that's kind of my 2 cents on that. Lack of patience, sticking to your strategy and avoiding impulsive decisions, and then just ignoring risk management. A lot of people don't do that. All right, starting today, open up a broker's account and start paper trading. I'll put a link to Mumu down below. Develop your strategy, build a foundation, and practice consistency, and stay disciplined. Follow the market, track trends, news, and updates to stay informed and ready. All right, questions. If you guys have any questions, feel free to ask, and we are going to move on to our holdings. So, all right, with swing trading, like I said, there's a million ways you guys can make money. Now, over the past couple of months, we've seen a lot of volatility from just the general market, right? We've taken a couple of good swing trades. We've taken one on GILD, which this one here was a 50-day moving average play where it hit that 50-day moving average line and had that good rally up. It was undervalued on the RSI. Good upward trends, going to a lower time frame. You don't want to always just use one time frame. You want to use several time frames because one time frame can be telling you one thing and then another could be telling you another. So with GILD, like we kind of talked about, you got to have that that checklist for your entry. So we'll kind of run through it real quick, and you'll notice most of the stocks here that we cover here today follow that approach. So the first thing is an upward trend. Obviously, this thing has gone from about $59 all the way up to $120. Sold off down to about 100, all the way down here at the time to $104. This is where we bought in on the position, and the stock here went and hit that 50-day moving average line and moved its way up. But how do we know that? So first was the trend. The next thing here was that moving average line in general. Moving average lines are technical indicators that traders use to determine entry points and exit points. We also use the 50, the 90, and the 200, which is the yellow's the 50, the blue's the 90, the red's the 200. We also use the RSI, which is a momentum indicator. So at the time it was trading for a 38. Last time it was trading for a 38 was back in this range where it had that good move. So let's go through this again. We have the trend, support, and RSI. The next thing here is going to a lower time frame and looking for a breakout. And at the time here, we saw this. we saw this stock here just slow and steadily breaking down through this trend line, right? Where it would hit it, sell off, hit it, sell off, hit it, sell off. So we set an alert above it. The stock popped up to 106. We actually waited for a little more of a breakout. And that's where we kind of got in near around 107, keeping our stops below that trend at like 105 for the rally up, keeping it, actually we're keeping it, keeping our stop loss just below this trend. And then it broke through the trend near and around, the 111 mark. And then the stock eventually did rally up. So for future reference, we could have kept our stop loss below the 200-day moving average line, but we covered profit, and that's very, very important here. So this was the strategy that we've been really working on, and it's been performing very, very well. So looking at one here like VOO, which is VOO, you guys will notice that this represents the top 500 companies. And look at this beautiful, beautiful trend line, okay, where it hits this trend line, buying pressure. Recently hits it, buying pressure, buying pressure, buying pressure. Recently sold off down to that level here, hit that and had immediate buying pressure. So this is like a very, very hard support that the stock has. So for future, I threw an alert here. I'm ready and notified if this thing sells off down to that point. We're ready to rock and roll. But what I've also been doing is as this ETF sells off, I've been averaging down. Averaging down is such an impactful strategy because what you do is as blue chip ETFs and blue chip stocks and huge ETFs sell off, you buy as they sell off, right? So if that's just say you had $1,000 to trade with VOO, instead of investing in and trading with $1,000 and getting in on a possible bad spot, you can go $100 a week for 10 weeks. And if the market sells off, that's just say 6% in a given week, double what you normally will put in. So if it sells off, 6%, then you, instead of doing $100, you could do $200, $300, $400 and get in on that low and move your average cost way down. That's what I do here. So this is a very, very, very good approach by using just basic trend lines. And even if we look at like other time frames here, you can still see that this stock here, or ETF really, will have good breakouts, right? Because you guys can see good breakout here, boom, popped up, could have gotten a really nice trade there. We've been in on a variety of fantastic blue chip stocks here, like this one here, Berkshire Hathaway, beautiful trend line here on the hourly time frame, hits it, buying pressure, buying pressure, buying pressure. So we got in near and around 449, and looking at just our returns as of right now, this is our digital journal. We're up about $2,800 here, and most of it is off of these nice trades. So, people ask and they go, Carter, why are you not, doing like the GILD trades that often? It's very simple. It's just because of the market volatility. Right now, we're seeing huge swings in the market where some days it pops up, some days it tanks down. For a trader, you can day trade these a lot easier than swing trading. So like we took a day trade on ROOT for like $1,000 profit. And all it was is very similar, stock on an upward trend, sold off down to that 90-day moving average line, right? Went to the hourly, hit that resistance yesterday, sold off, formed a new trend, popped up above that old resistance, rallied its way up above that 200 and just got out before the market closed, because we didn't want to hold this position overnight just due to the risk tolerance. And then what happened? Huge sell-off, right? We would be pretty much almost about break even right now if we were continuing to hold this trade. For a swing trade, now that this trend is possibly forming, I could see myself taking a trade at, on the trend at 112, keeping stops below 108, 109 for a possible move on that hourly trend line. And that's what you kind of got to alter as a trader is as the market shifts, so will your strategy, so will your, setup. So guys, if you're watching this, check out our school. And don't forget to use code SPRING25 for 51% off, and then check out our new merch. It's so exciting. It's so exciting. And smash that like button. If you guys are watching, smash that like button. It means the world to me when you guys do that. But yeah, ROOT, great trade. And this is, was like $1,000 setup. And the reason why is because the whole market just moved, 10%. So it was just crazy how fast the stock moved up. But you guys will notice that most of the positions, all of the positions really that we are holding overnight are all blue chip or ETFs that have blue chip stocks in them, like Meta, Berkshire Hathaway, VU, QQQ, Visa, Amazon, Google. Google has been one of the stocks here that we've actually been slowly thinning out as it moves up. Just because we started averaging down a little too soon, which does happen, but not too big of a deal. Then we got MAGS, which is a Magnificent 7 ETF. So yeah, that's the approach right now. Opportunity wise, I mean, obviously I'm looking at Tesla. I think Tesla does carry a little bit of some potential, long and short potential. I think that in the range of here, we carry some short. Let me go ahead and draw it out. So don't be surprised if you guys see me take a short in this range, right? We can see the heavy amount of selling pressure, and then buying pressure we can see down in here, right? Around 119 in this range. So, right now it's kind of in that middle ground where it's not, I wouldn't take a trade because we could see it tank down or rally up. I think the risk is like 50-50, and that's a little too high for me, but Tesla is definitely a stock that I'm definitely leaving on watch. I think it carries a lot of potential. We got Royal Caribbean for a possible breakout here is on that downward trend line. What's crazy is when it was hitting this trend, I really was considering taking a short, but one of the main issues is by the time it hit it, I wanted to wait for confirmation in the morning, but it opened up way lower. So, that just does happen where by the time you see it and there's shares available to short, the market, opens and it's already down right after hours. It's down 4%. So I don't know. I just think it wasn't too good there, but we do have a little trend like this, which is interesting, going in that direction. So could see a little flag or something form out there, which definitely why it's on watch. Then we got here is Hood, also known as Robin Hood. For me, Robin Hood does carry some potential, but one of the main issues with it is this right here, which is a little trend like that, where we could see a little bit of a short side where it hits this and sells off. So we'll see. Definitely leave it on watch. But on the flip side, we could see a breakout. So we just got to be cautious. Go to the lower time frames and kind of see how it's looking on those. Then we got ERJ here, general downward trend line. This one here, the daily, has a good trend, good moving average line. So we're just leaving it on watch. Then we got MAGS X, which is a Magnificent 7 ETF. So this one is a leveraged ETF. Commonly asked question is, what's a leveraged ETF? It pretty much doubles the profit, doubles the losses. Just does carry more risk. So for new traders, don't recommend leverage. Then we got a GDS here, which was looking actually pretty good the other day. We have that general downward trend. I'll probably end up just deleting this off. Then we got DX here, which is just still riding that trend, right? Riding that downward trend. So we keep moving our alert for that breakout above that. So that's kind of the approach there. But like other blue chip stocks, I mean, they all carry potential, but do your due diligence. This is kind of what I'm looking at right now. If I see any trends that look cool, I definitely will put it in the group. And yeah, guys, I hope you guys all enjoyed today's live stream. It's fun. I always like doing the slideshows for new people, new beginners that are just getting started. And if you guys are watching and you want to, invest in yourself, check out our school, code Spring25 for 51% off. And then check out our new merch. It's super exciting. I ordered a bunch of it, and it's coming in the next couple of days. So check out that. And you guys can use code dividends for 20% off on the merch. So come on, it helps the channel. We'll do giveaways and stuff as we grow, and I'm excited, guys. So we'll see you guys. Hope you guys all enjoyed this. And for those of you that this is your first live, we go live every single Friday at 1 p.m. So we'll see you guys in the next one.